Good morning, good morning, good morning. Welcome to today's Morning Blast. It is Tuesday, the 22nd of July, all day. You join myself and Mr. Michael Brown for a review of yesterday's action, a preview of today. Uh, there'll probably be a bit of swearing and a bit of a rant in there somewhere. Some awful puns, no doubt. But before we kick on, I'll get the legals out of the way. Nothing discussed on the Spaces session constitute trading or investment advice or infers any kind of endorsement by PIQ, myself, Ryan Paisley, or indeed Mr. Michael Brown. Hello, Mr. Michael Brown.
Good morning to you, Ryan. Very good morning, everyone. Happy Tuesday.
Happy Tuesday to you. How are you?
Well, I'm okay. I'm still battling with technology. The 3 pages I need to print, or have been trying to print since 3 o'clock yesterday afternoon, still haven't emerged from the printer. But apart from that, all is okay.
Sorry. You being serious? You still genuinely haven't got the printer to work?
Yes, I am being completely serious with that, and I'm currently in the relatively embarrassing situation where I need to do a job interview in 90 minutes' time and don't have the bloke's CV in front of me. So, if you are being interviewed by Pepstone this morning, apologies in advance.
That's exactly what I was about to say. I was like, oh God, I hope he's listening.
I really do as well.
Oh, brilliant. Well, see where yours, and that's the end of the show. That's my day. But oh, hello, Zach's listening. That's the
Morning,
first.
Zach.
Hey,
How are you?
he's back. Right,
I
anyway,
don't know
moving
why I
on.
asked him how he is. He can't reply.
What's been occurring?
Oh dear, right. Where do we start this morning? Well, let's start in the equity space actually, because it was a relatively sluggish start to the week yesterday. But the S&P 500 and the Nasdaq 100 both managed to notch record highs to kick off the week. The S&P closing north of 6,300 for the first time, and the Nasdaq 100 closing north of 23,000 for the first time. So the risk rally rolls on despite a lack of significant catalysts as the week got underway. Although conditions were a little bit quiet in the equity complex, we did see some decent moves elsewhere. The long end of the Treasury curve and actually fixed income curves across DM rallying fairly strongly. 30-year Treasury yields down by about 6 or 7 basis points on the day. This seems to be largely a spillover impact from the Japanese elections over the weekend. Obviously, the LDP losing their majority in the upper house, but the result being considerably closer than participants have been expecting, which in turn lessens the likelihood of Japan delivering significant fiscal stimulus and has given a little bit of a relief to bond bulls, particularly at the long end of the curve. And that rally that we saw in treasuries did pose a few headwinds for the dollar, with the dollar index falling by about 0.5% on the day and trading back beneath the 98 figure. In terms of bits and bobs from yesterday, we may as well start with trade. We heard from Treasury Secretary Scott Bessent yesterday. He was talking on CNBC, saying that trade talks are, quote, moving along. But he did also say, and I think this is an interesting line, that he is more concerned about getting high quality deals than getting deals done by the 1st of August. It very much feels like Scott Bessent is setting us up there to kick the can down the road once again on the trade front. And I'd like to just refer you all to some remarks that Scott Bessent made probably 3 or 4 weeks ago now, where he said that we could have the issue of trade wrapped up by Labor Day. For those unfamiliar with the US calendar, Labor Day this year is on the 1st of September. So it feels like taco time is coming round once again. Sticking with the issue of trade, Bessent saying that Europe has become more engaged with trade talks. Talks with China are in a good place. Positivity, yeah, but do we really buy it? Probably not. We did also hear from a couple of other countries on the trade front yesterday. India, apparently, according to local Indian media, the Indian trade negotiating team has flown back to the country, and they believe that a deal with the US is now likely by September or October at the earliest. Again, a sign that this 1st of August deadline probably isn't really a deadline, despite what Trump would have you believe. We also heard from Taiwan yesterday, and they said that they're going to conduct a new round of trade talks with the United States this week. Of course, that is one worth watching relatively closely, given the importance of the chip and the semiconductor sector to, well, both economies, frankly, but of course, mainly to the US. Sticking with the States, I suppose we've got to mention this nonsense going on with the Fed once again. Let me stress, when I say nonsense, this is not engineered by the Fed. This is all engineered by the Trump administration. What seems to be happening, for those who are unfamiliar, is the Fed, their offices are in the Mariner Eccles building in Washington, D.C., which is an incredibly old building and, funnily enough, needs some renovation. Now, this is also a listed or a preserved building, so it needs to be renovated in a very, very specific way in order to keep it in the same style. You can't have, a 200-odd-year-old building, demolish it and build a 600-floor skyscraper in its place. That's not how these things work. Every country has various sort of preservation laws. So naturally, refurbishing such a building is quite an expensive endeavour. It is also an endeavour that uses quite a lot of what you may term lavish materials, things like marble and granite, which, if you were building a building from scratch, you probably wouldn't use. When you're
But to
renovating
be
one
fair,
that
so
already uses it, you have to put them back in.
bit like your kitchen and bathroom. There's a lot of I've heard there's a lot of Carrera marble knocking around. Some
Which,
gold plated taps, etc.
oh yeah, do you remember that? It was years ago now. The art installation, it was a gold toilet that someone nicked from a
Yeah, and
stately
someone
home. Do you
nicked it.
remember that?
Yeah.
Yeah, it's in my bathroom now. Um, anyway, this renovation, basically, a number of people within the Trump administration seem to be trying to use this. It's going to cost $2.5 billion, whatever it may be. A lot of people in the Trump admin are basically trying to use the increasing costs of this renovation as a way of trying to get rid of Powell for cause. Basically saying, you've mismanaged the project, that gives us enough ammunition to sack you. Now, I am not a lawyer, but I would imagine that that case does not hold any water whatsoever when it comes to actually trying to oust a Fed chair. When we say for cause, it's gross misconduct. It's a criminal offence. It's
Well,
not,
and this is it,
we
right?
spent a few extra million on a renovation
But
project.
this is it. It's not like Powell's going around with his hard hat on and doing a bit of labouring himself. It's not like he's making the decisions here. Yeah,
No,
it's like
absolutely
there's
not.
a whole committee behind this renovation and stuff. Powell, Powell doesn't give a shit what colour the marble is.
No, of course he doesn't. And anyway, the reason I mention all of this is twofold. One, because various members of the Trump administration are going to visit the Fed this week because they want to review this building project. What the hell they know about it, God only knows, but it's likely to result in some pretty fiery tweets and pictures and God knows whatever else once they have actually conducted that visit. And the second reason I mention this is because a Republican lawmaker, Representative Anna Paulina Luna, who I'd never heard of until yesterday afternoon, has decided that she wants to refer Fed Chair Powell to the Department of Justice for criminal charges, accusing him of lying under oath regarding the quote lavish amenities at the Eccles building and for misrepresenting the building's material state.
All
I'm
right.
going to coin a technical term here. That is complete and utter fucking nonsense. All this seems to
Yes.
be is some jumped up junior lawmaker in Florida with fuck all better to do, trying to get a few clicks
Yes.
on social media. And all of
Yes.
this at the same time is a massive distraction from the Fed actually doing their job, which is setting monetary policy. I mention it because it's going to get a lot of media attention. All the usual suspects on Twitter are going to go, oh, it means Powell's going to be sacked tomorrow. Of course, that is complete and utter nonsense. And actually, I don't know whether he's on the call this morning, but my good friend and yours, actually, Ryan Littlestone over at Forex Analytics, I liked his analogy that he used yesterday, basically saying that firing Powell is a little bit like an option for Trump, where the time decay on it, it means that the upside or potential upside from doing so decreases quite substantially the nearer you get to the point where you would just nominate another Fed chair anyway. And if that nomination is going to come in, let's say September, October, what's the point of going through all of this nonsense in terms of trying to force Powell out beforehand when your own man is going to be in the job
Well,
in 9 months' time anyway?
as as I said last week and then the week before that, the reason why I think Trump is still kind of keen to kind of get the media frothy is because it takes the media's attention away from other stories that are around the Trump administration, such as the Epstein files and stuff like that. And that's not just me being putting the tinfoil fedora on. I genuinely think that Trump's looking for anything to get the media's attention away from that, because you remember how 2, 3 weeks ago everyone was talking about how Trump had just basically pushed the Epstein files pushed them
Mm.
under the carpet. Well, literally, because they no longer exist apparently. Um, but literally no one's talking about it anymore. And that's
Yeah,
exactly what we're doing. Like, we're now, all the media's attention is on this, on Powell. He's not going to get rid of Powell. He can't get rid of Powell, especially not the way he's trying to go about it. But it draws the media attention away from everything else.
yeah, absolutely. And I think that's a good way to look at it. Is just a pure distraction tactic, basically. A few other bits and bobs from yesterday, just moving on from that nonsense. Sticking with Trump, though, the CBO, the Congressional Budget Office, yesterday saying that Trump's tax law, which is obviously the One Big Beautiful Bill Act, that is going to add $3.5 trillion to the US deficit over the next decade. The bill
Wow.
decreases spending by $1 trillion, but it will also decrease revenues by $4.5 billion. So, bearing in mind, of course, that the US is already running about a 7% budget deficit without going into any sort of recession or slowdown, in which the government would naturally need to provide greater fiscal stimulus. And they've just signed a bill to add $3.5 trillion on top of that deficit. It's quite easy to see why there are some fairly chunky fiscal jitters in the market at the moment. Moving away from that, Bloomberg sources reporting this morning that the Bank of Japan is likely to leave its benchmark interest rate unchanged at their policy decision next week. The BOJ reportedly sees little impact from the weekend election on their policy stance, and that the Bank of Japan will watch the impact of any trade talks before delivering any further rate hikes. This is all very much in line with expectations. The market wasn't pricing anything from the BOJ anyway, and they are in a bit of a bind at the moment because they want to continue raising rates, but they also have quite a lot of uncertainty on the trade and domestic political fronts that they will probably want to see resolved, or at least on its way to a resolution, before they take any further steps to tighten policy. Here in the UK, a couple of updates out of the ONS. Firstly, the ONS saying yesterday that they are continuing to aim for November 2026 as to when they will unveil the transformed labour market survey, but they said that that may be delayed and could take until the middle of 2027. Absolutely no rush on that one, lads. It's only been since mid 2023 that we have not had accurate employment data here in the UK, so at this point, what difference does another 6 months make? Also out of the ONS this morning, news that will probably leave Rachel Reeves in tears once more. The budget deficit at £20.7 billion
Ugh.
in June, a couple of billion above market expectations, and also the highest June figure on record, excluding 2020, which was, of course, massively skewed by the pandemic. Again, with every passing day, it seems like tax hikes, or substantial tax hikes in the autumn budget, become increasingly likely. And last but by no means least, news out of Europe yesterday, the ECB, they have given Credit Agricole a bit of a slap on the wrist. They are apparently going to get a fine over failures in terms of climate change risk management, and that fine is likely to be, wait for this, no more than €7 million. I reckon they'd probably spend more on lawyers administering that
Yeah.
fine than they would actually get if that fine is paid.
Another classic cost of doing business for a European bank.
Yeah, I mean, literally, if you're at the ECB, what is the point of issuing that?
Yeah, exactly that, exactly that. Thank you for that, Mr. Michael Brown. So I'll rattle off some overnight news headlines via our good friend Zach. It's a pleasure to have him listening to the show today. It's been a while. As usual, do follow Zach. He, jokes aside, he's a top egg. And also definitely subscribe to the Overnight News Roundup for your best way to get overnight news headlines delivered into your inbox. So starting off with trade. Japan's government said tariff negotiator Akazawa and US Commerce Secretary Lutnick met for over 2 hours in Washington on Monday and held frank talks to seek agreement benefiting both Japan and the US government.
Who's Frank?
He said Japan will continue to seek common
Sorry.
ground on tariff issues and US. That is awful, awful. I'm not even giving that time of day. India and the US, their mini trade deal is ruled out before August the 1st, according to CNBC. Indonesia, their sovereign wealth fund, Danatara, plans to sign a $8 billion engineering, procurement, and construction contract with US engineering firm KBR to build 17 modular refineries. The contract is part of last week's trade pact between Indonesia and the US. South Korea, there to hold high level trade talks with the US on July 25th So what's that? 3 days from now, accelerating efforts to head off sweeping tariffs by weighing politically sensitive concessions that could reshape ties between the two allies. In macro news, US Treasury Secretary Bezant, he's called for deeper reforms on what he called an antiquated, I can't even say the word, financial regulatory,
Antiquated.
antiquated financial regulatory system, and said regulators should consider scrapping, a flawed Biden era proposal for a dual capital requirement structure for banks. I'll leave the smarter people to understand what that means. Potential ouster of the Fed chair Powell by Trump would drive the 30-year yields higher by more than half a percentage point, according to Deutsche Bank. But as we've said
And the
before,
rest.
well, I think that's what they've said at least. I think they're being very conservative in their note there.
Yeah.
Um, it might have a move. The biggest US grid, as in power grid, has no spare supply for new data centers, meaning project developers will need to build their own power plants, according to the system's independent watchdog. Bloomberg, their BOJ sources note the bank is likely to keep rates unchanged at the next meeting, as expected. The BOJ reportedly believes that the recent election will have minimal impact on its rate policy stance, but it said to recognise a risk of upward pressure on prices if there's significant fiscal loosening. The
Yeah,
BOJ
someone
plans
else
to
just said that.
yeah, well, smarter cookies in a room, right? The BOJ plans to monitor the effects of trade talks before considering any rate hikes, as we've known before. Moody's ratings said on Tuesday the potential impact of a cut to Japan's consumption taxes on the country's sovereign debt rating will depend on, quote, the scope, magnitude, and permanence of said cut. So we'll see what happens there. Moving to China, a distortion in China's money market has vanished after persisting throughout the year, uh, and hasn't signed that investors expect the latest stimulus efforts to reflate the economy. Moving to the UK, as Michael said, the UK government borrowed 20.7 billion in June, more than expected. Chancellor Reeves struggles with the country's economic growth uh, and her own fiscal rules. The shortfall between government income and spending was 6.6 billion more than in June 24, higher than the 17.1 billion forecast for June this year by the UK fiscal watchdog. Sticking with the UK made a final investment decision on Sizewell C nuclear power plant, a 38 billion pound project that's critical to the country's energy and climate goals. British government will retain a minority stake of around 45%. Bank of England officials there are mulling whether to set aside plans to create digital pound for households amid growing scepticism over the project's benefits, the latest sign of dwindling support for state-backed digital currencies globally. Moving over to Australia, the Reserve Bank of Australia, their monetary policy board kept rates on hold earlier this month, according to the minutes, deciding that a more gradual pace of cuts was needed. They said there was time to wait for the release of crucial second quarter inflation data. Moving over to Brazil, Brazil's finance minister said in an interview released on Monday that if the government complies with its fiscal target, the central bank will, quote, feel more empowered, unquote, to justify cutting interest rates. Geopolitical news, China is making a concerted effort to expand its influence throughout the UN, taking advantage of Donald Trump's disdain of multilateralism. That's going to the FT. In Ukraine, Ukraine's new prime minister said she's likely to seek more financing from the International Monetary Fund as she sets out to shore up the nation's fiscal needs with no end in sight to the Russian war. And equity news before I hand back to Mr. Michael Brown. SoftBank and OpenAI's 500 billion with a B AI project struggles to get off the ground, according to Wall Street Journal. The article notes that the Stargate venture introduced at the White House event is now setting the more modest goal of building a small data center by year end. So, bit of a flop there. TSMC, the chip giant, would have a hard time manufacturing Nvidia's H20 and AMD's MI308 chips for the China market. Now its advanced production capacity is nearly full. ARM, another chip giant, they're reportedly considering re-entry into the application-specific integrated chip market, ASIC, potentially positioning itself as a competitor to some of its key customers. JP Morgan, they are exploring lending against clients' cryptocurrencies. It's one for
Oh God.
Cam there. AstraZeneca, they said it plans to invest $50 billion in the US by 2030, marking the latest drug maker to commit to American manufacturing as looming tariffs threaten to raise costs across the industry. And finally, for me, Sanofi said it agreed to buy UK vaccine developer Vice Bio for up to $1.6 billion, adding vaccine candidates for respiratory viruses and human metapneumovirus to its pipeline. Yeah, good one. Um, anyway, Sanofi are buying someone for 1.6 billion. There you go.
Good,
Oh,
I think.
actually, this is worth saying. Universal Music Group have filed for a public offering in the US. There you go.
Oh, good. Well,
That's it for me.
I was trying to get a pun, but nothing came
Yeah,
to
no,
mind.
so was I. As soon as I saw it, and then I was like, shit, I haven't got anything.
Well, let's hope it strikes the right note with the market when it does
Oh,
list.
fuck off.
One story that I've literally just seen, actually, but I may as well mention it because it's riled me up. Keir Starmer, the Prime Minister, was testifying in front of a load of MPs yesterday, and he said rising unemployment is not necessarily a bad sign. Keir,
Whoa. Did he really say that?
yeah, he did.
Oh,
Now, let me say, one, Keir, you could be right. If rising unemployment was because of rising labour force participation and there's more people looking for a job, absolutely, pat on the back, great macro take. The problem, when unemployment is rising so substantially, it's rising because we've lost jobs for 8 months straight out of the economy, which is as a result of your budget, which raised employer national insurance contributions. So yeah, the amount of spin on that is complete and utter nonsense.
also, as soon as a politician, let alone a prime minister, starts saying quotes like that, you know
Yeah,
you're in the shit.
I mean he's writing the Conservatives' bloody political adverts for them at
Well,
this point, I think.
reform.
Well, and reform, and anyone, to be completely honest, even the bloody Lib Dems will capitalise on that.
Wow.
Anyway, before we get all political, let's preview today. Although this won't take particularly long because there's not much going on. In terms of the data docket, there is just one thing on it, and that is at 3 o'clock this afternoon, where we get the monthly manufacturing numbers from the Richmond Fed. Their index is expected at 0 in July compared to the prior -7. Do note that the Richmond Fed number, I mean, it's not going to move the market on its own, but it does help to shape expectations for the ISM manufacturing survey that
Yes.
is due in a week or so. The other thing to note on it is, for whatever reason, they've been releasing it about 90 seconds early for the last 3 months. So God knows what's going on there, but just one to bear in mind. In terms of other bits and bobs today, we do have some speakers on the docket, and I just want to mention this. We are due to hear today from Fed Chair Jay Powell and Fed Governor Mickey Bowman. Now, do note that the FOMC are now in their pre-meeting blackout period, which means, and I've quote here from the FOMC's communication policy, neither can make remarks on macroeconomic developments or monetary policy issues. Chair Powell is making some introductory remarks at a conference on financial regulation, and Michelle Bowman is moderating a fireside chat with Sam Altman, the geezer from OpenAI. So don't get too excited. They're on the calendar. Neither of them is going to say anything pertinent in terms of policy, because, of course, we are just over a week away from the next FOMC meeting, which is, of course, next Wednesday. We're also due to hear from Bank of England Governor Andrew Bailey today. But again, don't get too excited, because the big man will be speaking on the issue of financial stability as opposed to anything regarding interest rates or monetary policy. Last but by no means least, a few earnings to be aware of today. A lot of defence names reporting before the open. Lockheed Martin, RTX, formerly Raytheon, Northrop Grumman. Also due to hear from General Motors and from Coca-Cola. So we'll see whether this stock fizzes higher or
Oh,
whether it falls
God.
flat in pre-market trade. And then after the market close, we're due to hear from SAP. And they are, of course, the largest stock by weighting in the DAX. So of interest for any European index traders. And among all of that, still on the lookout for any trade or tariff-related developments as well. And that is all from me this morning.
And also, we are one day closer to durable goods, which is going to be an
Oh,
absolute clusterfuck. To be
indeed.
honest, I'm actually looking forward to the reactions to durable goods. Anyone that's not, well, anyone that wasn't listening yesterday, basically, durable goods is going to come in really, really bad because it was really, really good last month. And myself, and I, and my dear friend Michael Brown are looking forward to the usual talking heads getting all frothy knickers about it. But the
I
thing is,
reckon
go on.
we could sit, we're not going to do it, but I reckon you and I could sit down and put together a list of about
Oh,
10 names that are
mentally, I've already got the
guaranteed
list.
to say
I've already
something.
got the mental list of who's going to lose their mind over durable goods. But this
Number
is the thing,
one,
right?
Zach Eisman.
Oh, absolutely. Two, Tom talks cars. But the thing I like about situations like this is a massive litmus test for who really doesn't know what the fuck they're talking about.
Oh, 100%.
So when you get like moments of stress in the markets, or when like extremes happen, like we'll probably see with durable goods is going to be a really bad number because, as Michael said yesterday, it's because last month it was a really insanely good number because of basically one huge order from Qatar Airways for Boeing.
Hmm.
So the what I love about these moments is, the mask slips for a lot of people. So we're going to find out who. Well, we already know who basically talks bollocks, but we're going to see, and it's going to be very apparent who hasn't got a fucking clue what they're really talking about. So
Yeah.
I for one, am really looking forward to it. But anyway, one day closer to that. Michael, thank you so much as always. And
I
go
can't
on.
believe I'm the one to say this, but when durable goods orders is the highlight of your week, get a life.
I know, well, tell me about it. How the times have changed. Oh God, I used to be a contender. But Michael, thank you so much. Listeners, thank you so much as always for tuning in. Whatever you're doing today, keep it tight, stay safe, and we'll see you tomorrow. Much love.
Indeed. Bye for now.